Wednesday, May 15th, 2024, Maneco 64, home of alternative economics and contrarian views. I remember back in the late 70s, early 80s, as I was graduating from high school, going to college, studying economics, that the main mantra was that it was OPEC's fault that we had inflation back in the 70s. But I'm going to show it to you that it's all to do with monetary disorder, and that precious metals, especially the secular precious metals bull market that we saw in the 1970s, is a reflection of monetary disorder. It wasn't oil that caused the inflation, but the fact that Nixon closed the gold window, defaulted, and unbacked the dollar from the gold anchor. And I'm going to look at the 21st century because I think there was a big event that has led to the current monetary disorder and to the current secular bull market in precious metals, in my opinion. So I wanted to show you a bit of proof about OPEC and what Nixon did on August 15th, 1971. And I have to thank Ronnie Stoffler from In Gold We Trust, or Incrementum AG. And he found the minutes of a meeting of OPEC back on October 7th, 1971 in Vienna. They say here in the minutes, their first comment, it says, that member countries shall take necessary action and or shall establish negotiations individually or in groups with the oil companies with a view to adopting ways and means to offset any adverse effect on the per barrel real income of member countries resulting from the international monetary developments as of 15th of August, 1971. And I would say that date will forever live in infamy, monetary infamy. That's probably the most important date in modern monetary history. There's another one we're going to look at in a minute. So I wanted to show you the chart of gold back in the late 60s, well, until the mid 70s. And you can see that after Nixon suspended convertibility, and he said temporarily at the time, you can see how gold took off. It used to be fixed at 35. It was creeping up. That's why he had to close the gold window. But we went pretty much from like just below 40 to just below 200. By the end of, the end of 1974. Eventually, we went up to almost 900 back in January 1980. And now I'm going to show you as well the chart of crude oil back around the same period. And you can see crude oil was pretty boring back in the late 60s, early 70s. The price of crude oil was hovering around $3 to $4, and you can see that meeting of OPEC in Vienna, and then it took a little while, but eventually crude oil had spiked to almost $14 by 1977, and that happened because these commodity producers, they know what gold is, they know what money is, and they see that the major reserve currency was detached from real money. They want more for their commodities, and that's why it was because of monetary disorder that we had rising prices. It wasn't because of rising oil prices. Oil prices, of course, got up to 40 by 1980, so a tenfold increase. So now we come to the 21st century, and we go briefly through this. And in a minute, we're going to look at a very interesting opportunity, in my opinion, to try to profit from the continuing secular market of the 21st century. But first, we're going to look at what's happening, the bigger picture since the beginning of the century. And I said that August 15th was an infamous date for monetary history. Well, I think November 21st, 2002 will also be seen as a date that's infamous. And that was Ben Bernanke's helicopter money speech. And this is what he said in that speech. By increasing the number of US dollars in circulation, or even by credibly threatening to do so, the US government can also reduce the value of a dollar in terms of goods and services, which is equivalent to raising the prices in dollars of those goods and services. We conclude that under a paper money system, a determined government can always generate higher spending and hence positive inflation. I remember that speech really well. I had already started buying physical gold, and that convinced me that we were at the start of something huge, and I don't think I've been disappointed. You can see that we had another step in the process of inflation back in November 25th, 2008, when QE1 was announced. And then we had another announcement in March 2020 by all the major central banks of massive QE and fiscal spending. The cover for it, of course, was the crisis that the health crisis that we had. And now we've broken out. And this is just the beginning, in my opinion. And with that, we're going to look at this opportunity in the gold mining exploration sector. So the exploration company we're going to look at today is a very interesting opportunity. First of all, the company is called Rua Gold. Ticker symbol is NZAUF in the US. And we're going to look at where it is because it's a really interesting story. So New Zealand. So New Zealand, after decades of left-wing or socialist economics, has changed tack. They elected last November a new government, business or capitalist-friendly government. And yes, the new prime minister is the former CEO of a major airline. And the story with New Zealand as well is that despite great geology and a rich tradition of mining going back to the 1860s, New Zealand's mining industry has until recently been totally, well, not totally, but has been neglected. So Rua Gold is, in my opinion, an exceptional way to profit not only from New Zealand's newfound taste for capitalism, but also the ongoing secular bull market in gold that we just looked at. And before we look further into Rua Gold, I'd like to thank the company for partnering with my channel. So a little more about the company. The company has only recently, or about 3 months ago, gone public. But the acquisitions of some potentially very high-grade gold targets was done while the company was still private. Rua Gold has two major properties, one called Glamorgan on the North Island's Hauraki Goldfields, and the other called Reefton on the South Island. Glamorgan is adjacent to Oceania Gold's high-grade properties that were bought from Rua's COO, yes, Chief Operating Officer, Simon Henderson, who's an exploration geologist and specialist in orogenic and epithermal gold systems. So yes, the guy who sold the adjacent properties that have been very successful to Oceania is now the COO, the man in charge of operations for Rua Gold. Oceania Gold, for example, in its WKP property, has just updated its resources. It has 1 million troy ounces at 15.9 grams per ton of gold indicated, and it has 0.4 million ounces at 9 grams per ton of gold inferred. with potential for more than 10 million ounces. Rua also owns half of the Reefton goldfields on the South Island. This district has produced a total of 2 million ounces at around 24.5 grams per ton of gold. That's a very, very high grade compared to world norms. The high grade historical mines are untested as well at depth, as drilling was done down to only 150 meters. A comparable project called Blackwater in the region has resource open at depth with 23.5 grams per ton of gold mineralization found at 1,500 meters. So the way I look at Rua Gold is that it's an opportunity that is unique and a once-in-a-lifetime opportunity as well, because New Zealand is opening up to modern mining after decades of neglect, of course. So it's like going back to Nevada back in 1900, but using today's modern drilling technology, drilling and mining technology. So now we're going to look at the people and investors involved in this venture, and they're also top-notch in the mining industry. So the first one is Eric Sprott, a self-made mining billionaire. He's an investor in Rua. You've got Peter Marone, the founder and former chairman of Yamana Gold, which was sold to Newmont Mining for $4.8 billion. He's also a shareholder. And the chairman of Rua Gold and the largest shareholder, Oliver Lennox King, he was the former chairman of Frontier Gold, which was sold to Newmont Mining again for $2 billion. And he's also one of the richest men in New Zealand. And finally, on the people front, you've got Robert Eckford, the CEO. He was also the co-founder and CFO of Aris Mining and gave up compensation of about $500,000 a year to go to Rua Gold for a third of the compensation. But he's betting that his equity shareholding in Rua will make him a fortune. So just to summarize and give you some more information, the company has no debt, has plenty of cash for drilling. The ticker symbol in the US is NZAUF, and its market cap is currently just under $30 million. So the potential here is huge, as you've seen with the kind of properties that Rua Gold is surrounded by, and the kind of people that are involved as well, and the kind of projects they were involved in the past. You should, though, of course, do your own research and due diligence, and be aware that investing in mining exploration companies is highly speculative and risky. Of course, it's also potentially very profitable. So if you're interested in Rua Gold, make sure you go to the description of this video and click on the link below to their presentation. And yes, with that, I'm going to wish you all a very good day. Take care. Bye.